We gotta get this license for you. We really that's for 17,000 people get bread.
Nobody here was ever frauded.
Amid crackdowns by U.S. and Jamaican law enforcement, these scammers are successfully recruiting their original victims to facilitate even more scams.
Welcome to episode 6 of Common Sense, powered by Lucozade, Armcore VPI, M&M Snacket, and the Book Club. And this afternoon's episode will be tackling financial red flags, and we're going to be discussing Ponzi schemes and pyramid schemes. And as everyone would know, and for those who are joining us outside of Guyana, I was checking our viewership just today, and we've been having a lot of views from Europe. And you know, Guyanese are all over the world. So I want to thank our viewers from the Caribbean, from Europe, from Asia. And for those in the regions other than Guyana, last year we had three major issues in Guyana last year. We had the pandemic to deal with. We had one of the longest elections in human history. And then we had a Ponzi scheme that sort of rippled through the entire society, and thousands of persons were embroiled in this scheme, and millions of dollars were lost, I would say. So we want to delve into what really happened last year and how we can protect ourselves as individuals moving forward. And with me this afternoon is none other than Mr. Richard Rambarran. And if you were interested in finance, business, anything along those fields, you would know the name. He is very well known in financial circles. He's also a lecturer at the University of Guyana, and he is the executive director of the Georgetown Chamber of Commerce and Industry. And it's a privilege and honor to have him here this afternoon. Thank you very much for being here this afternoon, Mr. Rambarran. And let's go straight into what we want to discuss this afternoon. Now, because of the pandemic and because of the economic hardships that followed with the pandemic, I would say that many persons were very desperate last year in terms of finding means to provide for their families and maintain their livelihood. And it was the perfect opportunity for scammers to basically scam. And I think in Guyana, we had our own experience of fraud, as we would want to call it. And for me, it was very unfortunate seeing persons lose their hard-earned money. Persons put their blood and their sweat into earning money for their families, and then because of some erroneous decisions, their finances were lost. So can you share a bit of what exactly happened last year in terms of the Ponzi scheme or the pyramid scheme, as we would call it?
Right, sure. Thank you very much, Matthew, and thank you also for inviting me. I want to just firstly commend the initiative that you guys are doing here with Common Sense. I've been following a couple of the episodes. I think that they are rich and informative, and it's certainly something that fills a gap within our society. So that's the first thing, and I want to say and welcome also to your viewers and listeners to this segment. Now, for those who have been following, as you have rightly adumbrated, for those who have been following public affairs in Guyana, you would know that there has been a significant Ponzi scheme, or let's put it differently, in a more generic sense, fraud that has happened in our society. Now, it's a very interesting experience for those who would have participated in, but from an economic as well as a financial perspective, it is also a very interesting occurrence. Firstly, Ponzi scheme, maybe we can start by defining that, because that is what happened last year. A Ponzi scheme is a type of fraudulent activity which takes money from a particular individual and continues to take money from different individuals with the promise to repay at various points. Now, the best way, in terms of anecdotally that this can be described, is robbing Peter to pay Paul.
Correct.
Right? Essentially, I would be taking money from you and paying to another person with the particular rate of return which I would have promised that individual. Now, the difference, however, is that I will not have a finite end to how and when and where the money is going to be repaid. If you think about it within a business context, there is no quote-unquote exit strategy or end game. It's going to be a consistent and a continuous form of usurping money from individuals who seem to be interested in investing. Now, in Guyana, of course, Ponzi schemes take various forms. We would have had one here where persons were being promised X amount of return. I can't particularly recall exactly what it was, but essentially they were being promised for return. And then there were some instances, I believe, as the scheme progressed and it became more evident that it was unable to service some of its investors, quote unquote, that you really had persons now being paid almost to recruit other individuals, which brings another type of fraudulent activity, which is of course a pyramid scheme, into it. So for persons who are looking, who may not have financial expertise, firstly, a Ponzi scheme, as I would have mentioned, is Peter robbing to pay Paul. So that's on the Ponzi scheme side. But a pyramid scheme, it's essentially persons being paid to recruit other individuals. And it moves in the direction of a pyramid, where one would have the person at the top who pays two individuals, and then the two individuals, they are paying other individuals to recruit more and more persons. So that is the reason, of course, it's called a pyramid scheme.
Thank you very much, Richard. Now, the first time I came across anything like this was with the situation that we had in the Caribbean with Mr. Alan Stanford. And we all know that he was jailed, but for our viewers that may not know what exactly happened there, can you share a bit of what happened there, and were there any similarities to what happened in Guyana last year?
Yeah, so if we are to explore fully the depth of what happened with Stanford Financial Group, it would be something that would take us perhaps more than one episode. But essentially, Alan Stanford was able to mask a Ponzi scheme under the guise of legitimate financial activity. Alan Stanford actually owned a financial group, which he claimed in the financial group had insurance, investment banking, hedge funds, etc. But what essentially he was doing at the core of his activity was taking money from one individual and giving to another individual. So as it relates to the primary structure of the activity, yes, there exists parallels and there exist similarities. But I'd want to say that Alan Stanford's operation was much more complex, in the sense that it was larger, in the sense that it was under the guise of a legitimate form of activity. He actually had an investment bank, a financial group, and it was really clouded under a veil of what would seem to be a high degree of legitimacy. Whereas, and therefore it would have taken some degree of examination into the financials, into the operation, looking carefully at the instruments within which one would have to invest to uncover that what he was doing was an illegitimate type of financial activity. However, with this activity, which would have happened last year, the operations, while at its core were very similar, were not overly complex. They did not bear the same degree of layering which one would have found existing in Stanford Financial Group. And therefore, by logical extension, it did not warrant the type of examination that would have had to occur to uncover that it was a fraudulent type of activity.
Beautiful. Now, one more Ponzi scheme that I want to touch on before we identify some of the red flags is the original genesis of the word Ponzi. Now, based on some research, I would have came across that the word originated from Mr. Charles Ponzi, and his scheme was the genesis of the word. Can you share what really happened with Charles and how this word became a part of our lexicon?
Right, sure. So it's important for us to also put into place the true historical context of it. So it is not as though Ponzi schemes or fraudulent investment activities did not occur prior to Charles Ponzi.
Okay.
Prior to Charles Ponzi, there were a number of Ponzi schemes which were occurring. Why it is, however, called, and this would have especially been prevalent during the 1800s. So during that 19th century, you would have seen that. And this is, of course, as a result of what was happening within the economic development sphere of the maturing capitalist world, where one would have found that industrial activity was complemented by financial sector development. So these instruments were new. Overall, financial instruments were new. The point of stock brokering was new. Remember, international trade was coming into its own in the world. And therefore, we did not have the type of understanding that we do now. So fraudulent investment schemes did exist, but they were not, firstly, in the volume and to the degree that Charles Ponzi did. And they were not as popularized as he did. You see, Charles Ponzi essentially spread his wings across the landscape of the United States. And therefore, he ran one of the largest Ponzi schemes ever in the history. I think Bernie Madoff ran the largest,
Correct.
Maybe Alan Stanford, and then Charles Ponzi. So it was essentially the same type of activity, robbing Peter to pay Paul, but his mechanism of doing it was through international arbitrage of, I believe, postage stamps, if I'm not mistaken. An arbitrage, of course, is similar to what you would do, for example, with forex trading, foreign exchange trading, where you would be making money off of the differential by buying and selling. So I may buy currency at a particular rate and resell to another individual at a rate which will then give me a spread from which I can benefit. So essentially, he did his Ponzi scheme under the guise of international arbitrage. But it was not, of course, small in nature. And it was something which, at the face of it, in light of the prevailing information, seemed like a legitimate financial instrument.
Now, you mentioned pyramid schemes earlier. And I know in Guyana, particularly, pyramid schemes come masked under MLMs, multi-level marketing schemes. And at its surface, some of these schemes do actually sell legitimate products.
Yeah.
But when you delve into what exactly is happening, you can be able to discover that it's a pyramid scheme that is being conducted. What exactly is the difference between the pyramid scheme and the Ponzi scheme? And how can persons protect themselves from not being fooled by the legitimate product that may be at the face of the scheme, when in actuality they're being scammed?
All right. So the distinction and examining it in its taxonomical form is important for us to fully explore the discussion. Pyramid schemes and multi-level marketing, MLMs, bear similarity in the sense that they all operate from a basis where there is a tip or an individual and spreading out to other individuals. All pyramid schemes have in them inbuilt some degree of multi-level marketing.
Okay.
But not all multi-level marketing schemes are necessarily pyramid schemes. All right. So one is a subset of the other, but the other is not necessarily a subset. So any multi-level marketing that promises to pay individuals for the recruitment of other individuals, that activity is termed as a pyramid scheme. However, you can have multi-level marketing schemes or structures where it is not that persons are being paid, but there is an individual who acts as a sole distributor for products. They then perhaps distribute to various regions, and then that one person in region 3 maybe might have various products. Take, for example, I think it was Avon beauty products that used to be sold by individual resellers, or still being sold by individual resellers. It has inbuilt in it a level of multi-level marketing, or a degree of multi-level marketing, MLM. However, it is not a pyramid scheme. But if one may recall, about 10 years ago, there was something in Guyana called Organo Gold. Organo Gold, where they were claiming to sell coffee, right? And this coffee was supposed to be the pathway to one being able to access financial freedom. And they would paint all sorts of rosy pictures and have some questionable characters visiting and doing videos, etc. Where when one even does a simple Google search, you cannot verify the individual. You look for the location of where the headquarters is supposed to be, and it's a bridge somewhere under China, under some bridge in China. So if one recalls that, in that particular instance, they were looking for individuals who would essentially bring other persons on board. They did have a legitimate product in the sense that one did see coffee.
Correct.
You did see the Organo Gold coffee, but that was not the way that you were actually being paid, right? You were being paid for the recruitment of other individuals. Now, what eventually becomes of pyramid schemes is that persons are oftentimes left with dead stock, in the sense that the market will reach a degree of saturation for the product, and that is a common feature within competitive market economies, and that is where marketing comes into play to be able to differentiate the product and get it out to the general population in a different form. However, because that is not the fundamental or the thrust of what the objective function of the activity, you will not have marketing really being done on the product, and therefore the product becomes saturated, persons are left with dead stock, and it is not being purchased in the market. So that is a very common feature, and that is exactly what happened with Organo Gold back in the day that caused it to die. There are a few more that did make their way to Guyana. I think one was called Amway or something of the sort, where they were recruiting persons. They did have legitimate products, but they were paying persons to recruit others. So within the sphere of fraudulent investment instruments, you have multi-level marketing and its form that then takes a pyramid scheme, and then you have the Ponzi scheme, which, as I would have mentioned, is best described analogously as robbing Peter to pay Paul.
Excellent. Now, if you're now joining us, I'm in studio with Mr. Richard Rambarran, and we're discussing some financial red flags, Ponzi schemes, pyramid schemes, and everything that it relates to these issues. Now, Ponzi schemes continue to be successful despite repeated attempts of educating the populace. What would you posit to be the reason that these schemes are continuing to be successful? Because I could remember last year, we had an entire protest action whereby some persons who were successful or who would have accrued returns from the Ponzi scheme were protesting and fighting for the freedom of the mastermind behind the Ponzi scheme that we had in Guyana last year. So it seems to me that persons are actually benefiting from the scheme, and that may be the reason why, or one of the reasons why, they continue to be successful. But can you shed some light on why these schemes are successful, and also why there may be a few persons that are benefiting from the schemes?
Right. So both very excellent questions. Let me take the last one first. And the analogy always reigns supreme for it. If I am robbing Peter to pay Paul, Paul will be the beneficiary of my action of robbing Peter. And therefore, an individual is left worse off with another individual being left better off. Now, if you take that same functional form and you multiply it over maybe say 50,000 people, you will find that half of the people will be robbed and half of the people will benefit. Now, there are methods and mechanisms of when you understand that something is a Ponzi scheme, how to go about actually making money off of it for yourself. Part of it is being able to exit from the game early.
Correct.
Right? So that you are able to benefit before the scheme itself runs bankrupt. So that is the reason why you find that some individuals are able to benefit from it. One, the mere fact that by design, it encourages a certain participation, it encourages returns, etc. And simply because it is a method of persons being able to obtain funds. So that is the last part of it. The first question which you asked is also a very good one. Now, we all exist within a market-driven economy. We are all within the parlance of economics. If we are to take economics, the economic framework, we are all rational, objective human beings, or what is known as the economic man. And we are all trying to, aspiring to, or attaining to consume as much as we can. And this is done in a capitalist society by having money. And therefore, anything which can be able to improve our income, anything which we are able to obtain some form of return on a financial instrument, that will always appear appealing to an individual. So someone who has an instrument that is just sitting and earning maybe let's say 0.25% interest rate in the bank, which is not even covering inflation.
Correct.
That will obviously not be as attractive an option as an individual who's presenting a financial instrument that is able to earn you 15, 20, 25% rate of return. So it's a twofold thing. The first of it is that we have in us an innate desire to earn more, an innate desire to consume more, and essentially we want to be able to maximize our welfare by increasing consumption, which in our market economy, that is done through obtaining financials or finances. The second part of it, which perhaps is more along the line of the prevailing state of what obtains in Guyana, it's financial sector underdevelopment. In the sense that we do not in Guyana have a complex stock market. We do not have a well-developed financial sector. And the rate of return, which is offered by the legitimate financial sector, whether bank or non-bank financial institution, is not very high unless one is in possession of a high amount of capital.
Correct.
Because naturally, 4% on 100 million is much more in a nominal sense than 4% on $1 million. So I believe that it's a twofold thing that attracts persons in our types of economies, small, open, developing economies, that essentially drives a typical Guyanese person to it. If one takes the counterfactual, Matthew, in a society where we had more financial sector instruments, where we had a greater degree of financial sector development, then one may be able to obtain about 5, 6, 7% interest rate from a legitimate means, from a well-rated financial institution, as opposed to going to Accelerated Capital Inc., which is what the Ponzi scheme last year was called. So it is a twofold state. One, always trying to maximize, and then secondly, as a result of the prevailing condition of financial sector underdevelopment.
Beautiful. And you just mentioned and you spoke about the rate of returns, and that's actually the first red flag that I wanted to mention, because unlike traditional and legitimate sources of finance, the returns that you get or that are promised from Ponzi schemes are significantly higher. I know Accelerate with Capital, they were offering 40 to 60% return, which in most cases you would not get that high level of return from a stock market or from the bank or from the Trust College or Trust Guyana or any other legitimate source of finance. So we can easily say that the first red flag that persons should take note of is anybody that's offering probably above 50% return on an investment. You have to put your guard up and investigate what exactly they're offering you to see whether it is a legitimate source of investment. So could you shed some more light on the likely rates of returns from legitimate investments versus illegitimate investments? And also, because I believe that Guyanese have an appetite right now for investment, and as you mentioned, our financial market is not that developed, what are some sources of legitimate investments that we can take as persons who want to invest?
All right, great. So that's quite a lot for us to deal with. So let's start from the first point that you would have mentioned. Firstly, you mentioned above 50%. I would say take it much lower if one is to look at it. Really, you would have to be investing in a company to earn a high rate of return. You would have to be investing in a company that's really what is called in marketing theory a star. Something that has a new innovative product, something which is experiencing a rapid rate of growth within the commodities market or within the goods market. And really those are hard to come by. Those are once every generation. And really one would have to have faith in it to be able to obtain that type of return. I mean, if you take, for example, a commodity now, Facebook, right? That product, Facebook, and you try to sell that to someone in 1850, they will have no understanding of what it is that you're trying to sell them because they can't fathom what particularly you're talking about because of so many advances. So technological companies or tech advances tend to have a high rate of return on them. However, as we know, in the Guyanese market, we don't really have that advanced or that dynamic an environment in the technology space. So let's bring it more within the context of what we have here. Generally, one would say that companies in Guyana tend to, I would say, make somewhere between 15 to 25% markup. It depends on what area you're operating in, what particular sector, subsector, or even your industry. Now, you would have to be investing in a company which is going to be doing well to even reach those rates of return, right? So let's start from there. And that would have to be a company that's growing fast. However, when you begin to taper it down, you would have to be investing in our legitimate financial sector, which of course those companies are well marketed. They are mature firms. They are firms that are out there and one knows about it in a very public way. They have things like websites, legitimate domain names. You can see a headquarter. You know what it is that they're involved in. Those types of firms are firms where you will not be getting the rate of return that I would have just mentioned. The rate of return that you will be getting from firms on the stock market or publicly traded companies, if you structure an investment well, would be somewhere between 2 to about 6%. So really, when one looks at it, you have, I would say, a safe form, a low risk, low return type of activity, which is investing in the stock market in Guyana, which is buying shares in companies, etc., mature companies that tend to grow much slower at this point in time in their maturation or their product cycles. So they would give you that lower rate of return. And then you would have newer companies which may not be public, but you may be approached by an individual, and that type of small company or medium company can give you rates of returns ranging, I would say, between 10 to about 20-25%. If it is a company that is operating legitimately, smartly, they have good marketing, market research and marketing strategies to be able to back up what it is that they're endeavoring to do. So those for me would be the various tiers of return. And it's very important to note that there is the classic financial trade-off between risk and reward.
Correct.
Right? So the lower the risk, the lower the reward. The higher the risk, the higher the reward. However, when you begin to enter into realms, for example, of 50, 60, 75%, you think about it in a legitimate sense. What is it that you can do in the world that would give you returns in that way? Remember, all of these activities have to be supported by some form of either trade, arbitrage, as I would have mentioned earlier, commodity sales, or some sort of product delivery. Now, what can possibly be done that gives that type of rate of return? That is yet to be seen. So on that front, those I believe are the rates that one can legitimately expect in the absence of some form of drastic change in our local market. Right, so that's the first part of your question. The second part of your question, if you want to remind me as to what?
I think you would have touched both. I was asking about legitimate sources of investment for persons who are watching.
Right. Okay. So let's. That's very important. Firstly, there is the stock market, and you did I'd encourage all of your viewers to go back and look at the interview that you did with George Edwards, the general manager for Gasky. That's a legitimate source and market for investment. So that's one. And that is a one for someone who wants to earn some passive source of income. It's a low risk activity. It's something which is guaranteed returns, but naturally with any low risk type of activity, it would be low return. But then you do have some other types of opportunities existing in Guyana. For example, investment in companies. And this, of course, is something where I urge persons, once you are going to get into that type of activity, ensure that you undertake your due diligence. The reason being is that due diligence on any single thing that you're going to do will almost always reveal to you whether or not you should undertake the activity.
Correct.
So, and it's not complex to do due diligence. Ask around in the sector about this individual. Do simple things like Google searches. Check through the person's LinkedIn, for example. Do they have pages up? Which circles have they been in? What is their network? Right? Are they part of legitimate business associations such as the Chamber of Commerce, manufacturing associations, etc.? Are they part of the local business community or known by anyone? So those are some of the things that one would need to necessarily undertake if you are going to be approaching private investment. So I urge everyone, those two forms I think are the ones that you really can. The low risk, low return, or you could be investing in a private company where there may be a degree of risk, but it can be mitigated once managed properly, once there's a good management structure in place, and returns would be there.
Excellent stuff. Now, I think you already mentioned 3 of the red flags that I wanted to tackle. The Ponzi scheme was offering, or they were telling potential investors that there's no risk involved in investing their monies with the Ponzi scheme. Now, you would have already shared with us that in any investment, there is a level of risk, whether it be low or high.
In any activity
Correct.
that you ever undertake, there is always a degree of risk. Going into a car and traveling down the road, there is a risk.
Very high risk.
There is always a risk. There's actually a greater statistical likelihood of you getting into an accident in a car than on an airplane.
Correct.
So any activity, anytime you hear someone say something like that, that should immediately be a red flag. The reason why is that everything that exists on planet Earth has a degree of risk involved in it.
Correct. Correct. Now, you made an excellent point about doing due diligence, and that is one of the things that I think was sorely lacking last year in many Guyanese, because I would have had some friends that would have been involved in this Ponzi scheme. And I simply asked them to explain the process, how do you get your returns and so forth. And the explanations were very ambiguous. And I think this is a common feature, characteristic of Ponzi schemes, is that you don't exactly know what they're investing in or how they're accruing these returns. Can you shed some more light about the importance of doing due diligence and also understanding what exactly you're putting your money into? Because for me, I go to work from 9 to 5, from 8 to 4:30. I sweat to earn my money.
Blood, sweat, and tears.
And if I'm going to invest it, I want to know that, hey, I'm putting it into something that is legitimate and something that has the potential of giving me some level of return. So can you just expound a bit more on that point for me?
Sure. So what I want to say on that is really, one has to ensure that you start from where I would have mentioned due diligence. Now, if someone cannot explain to you clearly the financial mechanism through which you are going to earn your returns, that automatically should be a red flag, right? And that's not just one red flag, that's a whole heap of red flags, right? You know, you see the video on Instagram where the guy running around saying red flag, red flag. That's the kind of red flag that you're really getting from that kind of thing. Now, it might be masked under some term that sounds or is a legitimate financial term, but it does not, the person will not be able to explain the mechanism of that legitimate financial return, or even be able to, if you probe further, prove that is what they're entering into. So you might hear persons saying things that they're involved, for example, in some form of investment banking, hedge funds, futures trading, derivatives tradings, forex trading, foreign exchange trading. Now, it is not to say that these are not legitimate instruments.
Correct.
But ask the person, for example, delve a little bit further. For example, Wikipedia, what is hedge fund, right? Go do some Wikipedia reading or some YouTube videos simply on what it means by a derivative. And you'll find, of course, that they are traded on particular markets. And then go and ask the person a little bit more. Do some good due diligence. And then ask the person a little bit. Probe each time. Probe one time further and further and further. And you'll find that the argument or the advance or the proposition begins to break down. Because if you can't tell me which vehicle you are using to firstly take the money out of the country, which stock market you are investing on, where you are being paid through, or something of the sort, and you want to shroud it in some cloak of secrecy,
Correct.
then it does not make sense for me to be a partner with you. It is important that anytime you're entering into a financial arrangement with anyone, this goes for investments, loans, being paid by an employer, any form of financial relationship that one would have with someone, a necessary condition or a premise to that action being undertaken is trust. And if an individual cannot prove to you that he or she is trustworthy, then why would one want to invest with them, right? So in my opinion, you would not get into a vehicle with a taxi driver that you don't trust, or someone who you know is an unsavory character. Therefore, if you won't get into that vehicle with the person, why would you want to have an investment vehicle with someone that you don't trust? So it is very important that we put into perspective or demystify many of these things, because persons oftentimes like to use flowery language to cover it up. And I want to say also, reach out to persons that you know have some degree of understanding of financial instruments, and take advice.
Correct.
Take advice. Many persons during the Ponzi scheme thing would have reached out to me, dozens of persons, and I advise them not to. And I advise them as to what will be the eventuality of this particular action. And, by logical extension, that was what came to the end of it.
Excellent point. Now, as we begin to wrap up this evening's program, one of the other red flags that was clearly seen is the fact that Accelerated Capital was not a licensed financial institution. And in Guyana, there are certain regulations, there are certain laws that are in place to ensure that any company that is operating a kind of financial offering that Accelerated was doing, they must be registered with the Guyana Securities Council, and they must pass certain financial
criteria.
Criteria, correct. Can you just shed some more light on that theme, so that persons can know that if they're going to invest their money, ensure that the company that they're investing in is a registered, licensed institution?
Yeah, sure. So be not fooled by things of this nature. Any financial institution that operates in Guyana is governed firstly by the principal legislation for it, which is the Financial Institutions Act of 1995. And it's available widely. The laws of Guyana are public. They are oftentimes, some elements are written in complex language, but insofar as the basics, a layperson is supposed to be able to pick it up and just read it and have an elementary understanding of what is required. Now, if one goes through the act, you would see that there are certain conditions under which the particular activity has to occur. And there are certain criteria, as you would have mentioned. I won't endeavor to go into all of that. Now there's a discussion that we can have separately. But there are certain criteria that one would have to fulfill. Now, most, or if not all, of the financial agencies in Guyana, from commercial banks to insurance companies to trust companies to investment or merchant banks, even down to pawn shops,
correct,
have to have licenses which are issued by regulators. Now, someone showing you a company incorporation or putting ink at the end of a name, INC, does not make them a legitimate financial institution. It makes them a company.
Correct.
Now, a company may engage in legitimate activity, or they may engage in illegitimate activity, which would obviously bring the company to a natural conclusion, which is, in this case, is what happened. So I would urge persons, be educated on the laws in Guyana, be educated on what the legislative architecture is that governs the operation of financial institutions. If you come across something that you're unsure about, there are tons of pieces of information out there. Your series, for example, is doing a very good job at amalgamating a lot of that and putting it into a consumable format. Take the time and read the various pieces of information, or listen to the information from persons who are legitimate sources. I find that in Guyana overall, we have a society that does not like to read.
Correct.
And if they were to read, research, and spend more time doing some due diligence, they would not be falling into the types of traps that one would see, right? Last year, I would have told persons about it, about what will obtain with that company in terms of its collapse and some persons not being paid and others being paid. About 10 years ago or 8 years ago, whenever it was, I would have told persons then about organo gold and that this thing will come to a natural end and that you will be left with dead stock. So said, so done. And many of the persons are still around, but those persons who were proponents of it then, they somehow try to make you forget that that is so, that they did not try to sell a multi-level marketing scheme in this country, or a pyramid scheme. So I would urge everyone, read, do your due diligence, talk to persons who you know are legitimate sources for advice, and take the advice.
Excellent advice. Thank you very much, Richard, for being here tonight. And I want to thank all of our viewers for tuning in. I can assure you that Ponzi schemes and pyramid schemes are not finished in Guyana. They're going to be rebranded, renewed, and come back at some point over the next few years. And I think this is a very informative session to ensure that when it presents itself again, in whatever package or in whatever format, that we don't have thousands of persons falling prey like we did last year. And the funny thing about it is that many of the persons that fell prey were extremely educated persons, doctors and lawyers, religious persons, and persons of repute in the society even fell prey to the Ponzi scheme. So it goes to show you that regardless of your educational background or regardless of your status in society, it's very important that you become informed about these issues so that your hard-earned money is not wasted in fraudulent activities. So I want to thank you guys for tuning in. Don't forget to share the Facebook page, Common Sense, share our YouTube page, and subscribe. You can also follow us on Instagram at Common Sense to learn more about everything finance, everything business. On our next episode, we're in the Christmas season, and we're going to be having a session on some potential businesses that you can spend your money on during this season. We're going to be having some new businesses, some small businesses as well. So do tune into our next episode next week, Thursday, December 16th, and then the following week, we'll do something special for Christmas. I haven't exactly formalized it as yet, or I don't know the structure, but I can assure you that we're going to have some nice, either a drama or a few songs or a poem or something for Christmas. And then we're back in the new year. So I want to thank you again, Richard, for being here. And I want to thank everyone for tuning in, and do have a blessed rest of the day.
Brick, brick pam brick, brick pam brick, brick pam brick.